Laura, good afternoon.
Hi, Mark.
Good afternoon. Laura, normally we start with a quick explanation from you in your own words about what you do, and also a little bit about your role in supporting construction companies up and down the country.
Yeah, sure. And yeah, thanks for having me, Mark. Delighted to be on this session today, and talking about such an important topic. So as you said, I head up the manufacturing construction sectors across NatWest. And across the construction sector, we look after around 50,000 businesses, right through from small businesses through to tier one contractors and large corporates. And we lend just under about 4 billion to the sector, but also, I guess, importantly, support and fund the broader connected supply chain that connects through to the industry as well. And just a little bit about my role, and I guess predominantly what I focus on is supporting our customers to, I guess, navigate the numerous challenges that they face into, but more importantly, also to try and seize some of the opportunities that are available to them. And that involves me looking at our risk appetite, our growth strategy. So what sort of initiatives, propositions can we look at to help enable and drive growth across the construction sector? And important to this topic of discussion today, also spend a lot of time looking at how we can support businesses and our customers to transition to net zero. I guess why is that important? So the construction industry plays a vital role in the UK economy and contributes significantly to regional GDP. But it also faces quite a lot of scrutiny in terms of its environmental impact, and particularly when you look at the built environment contributing to 40% of the UK's carbon emissions. So I guess reducing and ultimately eliminating those emissions, whether that's through minimising the materials used in construction, particularly carbon intensive materials, looking at maximising the energy and heat efficiency of built assets, and also looking at ways to reuse and recycle and implementing those strategies. They're really critical to help in the UK really achieve its 2050 net zero targets. And I guess with the scale of our customer base, it's really important to me and to the bank that, firstly, we help and support our customers to understand the importance of sustainability and the key drivers to that, but then also to, I guess, navigate those challenges and opportunities linked to that agenda as well.
Brilliant, brilliant. Well, I mean, it's an interesting role for the bank to take. I mean, the bank has traditionally, if you go back 30 years, looked after our cash and, honoured our checks, and we've now see you moving into a space where you're providing really some very detailed advice to your customers. What's in it for the bank in doing this?
Yeah, well, I think, firstly, it's undeniable that the climate emergency is probably, one of, if not the biggest issues of our time. And UK businesses just need support to start and develop their journey to net zero. And I guess, with our expertise in this area, we're able to support businesses to do this. And from a banker and a financial institution's point of view, we have that ability to allocate capital and financial resources. So we play a really key role in unlocking decarbonisation across industries, and I guess helping to sort of reshape the real economy to a certain extent. And I think not only is tackling climate change clearly the right thing to do for the planet and for future generations, we also see it as very much an opportunity and provides significant revenue streams for our customers. And so we're committed to trying to help them take advantage of this. So our ambition is to become one of the leading banks in the UK in helping address the climate challenge. And we've got some pretty ambitious targets to try and drive and enable that. And firstly, that's about sort of leading by example, I guess, and getting our own house in order. So one of our targets is by 2050 to have our financed emissions, our assets under management and our own operational value chain, net zero. By 2030, we have the ambition of at least halving our climate impact of our financed emissions from a 2019 baseline. And to help drive this and enable this, we've committed to £100 billion worth of climate and sustainable financing funding, and making quite good progress on that front. And then obviously we are a retail bank as well, so also helping, we've committed to 50% of our UK mortgage homeowners having their houses at an EPC rating of C or above by 2030. So, quite ambitious targets, but we can't do this on our own, and we talk about collaboration a lot is needed when it comes to sustainability and gender, and that's really true. We rely on working closely with key partners, stakeholders, our investors and our customers to really sort of drive, I guess, that transformation and change.
Brilliant. I mean, no small challenge when, as you say, the construction accounts for such a large number of your customers, and we account for 40% of the UK emissions in the first place. And I think it'd be interesting to understand that those actually impact the bank's reporting. So your customers actually are part of the bank's carbon reporting in its own right, and you've got some international pressures, or national and international pressures, to reduce those down, haven't you?
Yeah. So I mean, if you look at why sustainability is important to us as a bank, and why it's a priority, I guess, not just for us in fairness, but other banks as well. We're just like any other business in the sense that we need to ascertain what those risks and potentially missed opportunities are if we're not prioritizing it. So as you say, from a risk point of view, climate change poses a significant global financial risk, from things like physical risks to extreme weather that we continually see occurrences, and really disrupting individuals, businesses, whether that's supply chains coming to a halt or not being able to get hold of materials or actually operate. But then also that transitional risk of economy shifting to greener practices, and I guess banks need to manage these risks and protect our portfolios, ensuring that our clients and our investments are mitigating against those risks and are resilient to be able to manage the environmental and regulatory changes that come with that. So as you said, there's pressures on the bank, as indeed with other businesses, and regulatory compliance is becoming huge, right? And I'm sure everybody's starting to feel that. And as governments and international bodies continue to ramp up those regulations, again, banks need to align to those and to the regulatory frameworks that we need to report to, and also to stay competitive, to be honest, in a heavily regulated environment. But then I guess on the flip side, from an opportunities point of view, that shift towards decarbonisation does create opportunities for us as a bank, and we can help develop and indeed finance those sustainable projects, whether that's renewable energy or green technologies, and really sort of tap into that growing demand for environmentally friendly investments. So you would have seen, new innovations, new products coming out by way of green finance, green bonds, sustainability linked loans, and other sort of ESG investment funds. But then I guess fundamentally we also have shareholders and investors to answer to. So there's as that global push for net zero intensifies, we having that pressure from investors, stakeholders, our customers as well, so that we do need to have really robust and actionable sustainability strategies in place. And we about 90% of our emissions as a bank comes from our financing and our investments. So that's a huge amount. And as we're Britain's biggest business bank. So not only do we have that responsibility to our customers, but actually to the UK economy as well.
I mean, I think it's fascinating that the bank is taking such a position, because clearly regulation is still playing some catch up in terms of decarbonising and driving the decarbonising agenda. We have a 2050 target, but that's, and you're talking about a 2030 target for the bank. So clearly your investors are keen to drive best practice from the bank, rather than just waiting on regulation to catch up. And as you say, you're in a highly regulated industry. So for me, it's it's sort of the writing's on the wall for all of us, that if the money markets, the men and women behind who are signing those checks for putting into the sector are demanding low carbon, then absolutely that's where we're going to have to be as an industry.
Yeah, and there are lots of dependencies on those. Those are, as I said, ambitious targets, but we do need to sort of see change from a number of areas, whether that's policy driven change from government, whether that's again businesses taking those steps as well. It takes everybody moving in that direction to achieve that progress, really. And it's not easy to do. We appreciate that and understand that, but we're trying to, I guess, using our scale and using the role that we have to play in helping with combat that climate change, try and drive that forward as best as we can.
Mm-hmm. Well, just sticking sort of strategically at the moment, what are the risks that the bank run if sustainability is not a clear priority?
Yeah, well, I think as I said, if we don't make it a priority, then there's huge risk from us from a point of view of how we can actually support our customers to transition. So if you look at it from that point of view, where we lend money to homeowners, but also to commercial businesses that have assets, then from a risk point of view, we can find ourselves in a place where if businesses aren't transitioning to net zero, and individuals aren't as well on our retail side of things, then that can potentially impact their ability to service their debt and affordability. And why would that happen, I guess, is the key thing. And that's really because of market demand will change, and you can find yourselves in homes that are less valued because they don't meet those requirements. It's difficult to sell on. You can have commercial properties that then become what we call sort of stranded assets, in the sense that they aren't worth what you may have thought they would be, and market demand is stipulating that. And essentially what that means then is that the collateral and the security that we put against our loans is then at risk, and businesses can potentially also become unprofitable because they're not competitive as well, and it could hinder their ability to service their loans and their debts. So that's very much from a risk point of view, but also how do we make sure that businesses seize those opportunities that a net zero economy brings? And I think that's the other bit that's really important. There's huge amounts of investment needed, as we know, to drive net zero across the UK and across the globe. So actually, how do we play our role in helping businesses seize those opportunities and potentially have new revenue income streams that then on the flip side can help them grow and become really fit for the future, really.
So it's almost self-preservation. You've identified this as an existential risk for your customers, and unless you help them, you might not have any customers, by the sound of it. That's
yeah. I mean, that is the extreme outcome, but in seriousness, that we're at a point where the economy and the world is changing very much so, and climate risk isn't. It's not a phase. It's very real, and it's not going away. So we need to work collaboratively, as I said, to try and make sure that we can combat that and prevent those risks, but also help one another to move forward with that as well.
Yeah. So Laura, just moving on then from sort of down into our world of construction, what are the sort of what's your approach that's promoting sustainability across your construction clients? And I know you get manufacturing as well, so you've clearly got a large real estate to look after.
Yeah.
In addition to construction, but it'd be interesting to know what are the key things that you're promoting into our sector.
So I guess our approach to sustainability, we sort of call it across the built environment, because I think that connects through the connected supply chain to a certain extent. And some of the work that we do in the bank is looking at how different sectors can transition. What are their transition plans, I guess, and the trajectory of those sectors in terms of, policy intervention, barriers, levers, actions that can be taken. And we started some of this work a few years back, and it became increasingly apparent that there's lots of linkages between sectors and how those dependencies, if you take an action or pull a lever over here, it can have a knock-on impact over there. And conversely, actually, what do you need to happen over there for this sector to decarbonise? Which sounds really obvious, I know, but it's when you start to look at these, and we sort of call it connected systems. And I think the most obvious of that sort of systems is the built environment, where we need to create energy efficient buildings, a good strong supply chain, and have government intervention to underpin that. And when we look at decarbonising the built environment, there's a number of factors that are at play. So you need to be able to retrofit existing buildings to increase their energy efficiency, but you also need to be building new efficient properties, as I said, with using less materials and constructing in a more carbon friendly way. But fundamentally, that's heavily dependent on the decarbonisation of the grid and decarbonising our heating and electricity supply. So, we kind of look at it that you can't achieve decarbonisation of the built environment without those factors working in parallel to each other and being connected in some way. And I mean, those are just three factors. There's obviously lots more, but, just to sort of bring that to life. And as I said, I guess from a risk point of view, that then connects through to the point I made around our security risk and the serviceability of debt, but also from an opportunity point of view, particularly when looking at sort of retrofitting, I guess, is a key one that we are focusing on. There's around like £360 billion worth of investment that's needed to upgrade the UK's inefficient buildings. And I think another stat is something like there's 80% of the buildings that will exist in 2050 have already been built.
Yeah, right? They've all been built. Yes. Yeah.
So retrofit is inevitably needed to reach those net zero targets, but that will create a wealth of opportunities across the built environment and create new jobs, create new supply chains, and even create new businesses. So we very much see that we can, I guess, again, provide that capital and support to help make that happen. So I guess that's sort of what we're looking at from a strategy point of view in sustainability. And we're doing lots of work in those areas, which can happily expand on at some point as well.
I mean, I think it is the detail is useful around some of those major areas, because retrofit has both got a regulatory problem. It's also got a performance issue, which we need to tackle quite carefully, and as a major skills issue. And I think it's great the bank is supporting those things, and particularly companies are getting involved in those. But actually, it's understanding how we overcome some of those that detail that's going to be the challenge. And I know the bank have a very good carbon reporting tool, for instance, which people can use for their businesses. That is again quite a useful element to get down into, to companies to actually start looking at their own carbon emissions and scope 1s, 2, and some of the scope 3s, which again can help businesses do exactly what you're talking about, is join that decarbonising sort of pathway and making sure that they can actually make a difference.
Yeah, and I guess just to expand on that, so in terms of actually what we're doing to help businesses and potentially your members that can benefit. So there's kind of two parts. As you say, the tools and the solutions and the funding that can help businesses actually to decarbonise their own footprint and take those steps and actions to net zero. But there's also lots of work that we're trying to do by way of initiatives and creating opportunities, but also providing those essential skills that's needed in a greener built environment. So as you mentioned, Mark, one of the things that our customers continually told us and tell us now is that, particularly if you're a small business and you don't have the resource and teams of people, where do you start with actually being able to ascertain what your carbon footprint is and what your emissions are? So we developed a carbon planner tool, we call it, which is basically a digital platform. So any business can use it. You don't need to bank with us. And essentially what that allows you to do is to input some data around your fuel and your operations, which is easily accessible for you to be able to put in, and then it will be able to give you those basics around where your emissions and your carbon footprints are. But more importantly, what are the actions you can actually start to take then? Because it's one thing ticking and going, right, I've finally been able to work out what my emissions are, but I now need to work out how I'm going to actually try and decrease them now. So that it gives those tailored recommendations on the basis of the inputs that you've put in. And importantly, let's be honest, cost is a driver here. So what are the costs that you could potentially save by taking these actions? So yeah, that's one area that we've looked at. And the other thing that's sort of connected to that slightly is obviously with the energy crisis hitting a few years ago and still very apparent today. Again, businesses were coming to us and saying, I know I need to reduce my energy costs, and I've done some sort of quick wins over here and the low hanging fruit, but I'm not quite sure what more I can be doing and actually what those savings would generate. So we partnered with a number of other businesses, and this is the point. We're bankers, we're funders, we're not necessarily the experts on other things.
No.
And we know that it's important to have tools to help you build that confidence and capability to get to that point of investment. So yeah, we partnered with some other businesses to create some digital energy tools as well. So really enables you to actually understand what steps you can take, again tailored to you, and what those savings would bring. And just to bring that to life on sort of solar panels as an example, some businesses would say, well, 2 buildings down the road to me have put solar panels on, and I'm not quite sure whether I can do it, whether my roof's suitable for it. So it's amazing the technology that exists nowadays, and it's beyond my capabilities. But there's tools that we have where you can literally put your postcode in, and geosatellite will be able to pick up your roof space and whether it does the sun shine in the right direction, how many solar panels would you need, what would be that return on investment and that payback period. But then again, also like actually what are the partners that you or suppliers you could work with that are credible and trusted to actually deliver that project. So again, that's just another example of some of the actual tools and support to reduce your carbon footprint. And then on the other side, I guess, is some of the initiatives that I mentioned around how we're trying to accelerate those opportunities in the built environment. And just to bring that to life, so on our retail side of things, we're one of the largest UK mortgage providers. We want to help our homeowners to have cheaper homes to run, warmer homes. That's really important, and obviously that will drive lower emissions. So last year we teamed up with British Gas and Worcester Bosch to do quite an interesting pilot of actually retrofitting 9 of our homeowners' properties from start to finish. So we fully funded it as a coalition, and it was really difficult, even with the funding. So we hear the challenges, but actually going through that and seeing the practical challenges of homeowners trying to make those upgrades to their property. And what we ascertained from that is that it's really important to make sure all those solutions are brought together, so the suppliers, the funding, so that it's integrated into one package. So we launched something called the Home Energy Hub last November, which is basically an online portal, a bit of a one-stop shop where you can go on and learn about energy efficiency benefits as a homeowner, but you can also access trusted tradespeople to then deliver those upgrades, and the funding solutions and potential grants and things like that. And again, that's available to any homeowner. You don't have to bank with us. So that's taken a sort of pilot in practical to see what those challenges are and try to build a solution to help with that. And then we're doing some work on trying to scale social housing retrofit, because I think a large piece of this is understanding from large scale projects the learnings again on that, and how you can actually take that insight and deliver new financial models, or how you help scale the supply chain. So again, we've partnered with Places for People, social housing provider, British Gas, Zero, to do a desktop pilot on 1,000 homes, with that ambition to learn and scale up from there. And then lastly, and I promise I'll shut up at that point.
No, it's fantastic. It's great news.
You know, when learning about all of these practical pilots and trials that we're doing, you know, again, we all know this is a problem, but you actually seeing this is how do you build the knowledge and the skills across the sector, the construction sector, to deliver, you know, a greener built environment. It's really challenging. And there was then there was a report by Ashton a couple of years ago, which I found quite fascinating, because it said something like 400,000 builders and skilled heating engineers were required to upgrade, you know, the 29 million houses that are needed to be retrofitted. And currently there's only 200,000 people working on upgrading and maintaining existing homes. Now, when you add that to the backdrop, as we know, with the sector struggling with accessing skills and labour, you know, I think there's like about 500,000 people that are going to exit the sector in the next 5 to 10 years. You know, that's just exasperated the problem, right? So we also partnered with the Supply Chain Sustainability School. Some of your members may have heard of them before. To provide a free retrofit learning program for the construction industry. So to really help share those skills and knowledge that's needed to help, you know, retrofit homes and buildings. And that, you know, that's all CPD accredited. Anybody can access it, and you can access that through online learning, webinars, workshops. And it's just trying to build that skill set, that confidence of businesses up and down the supply chain to be able to actually access those opportunities that retrofit brings. So lots of things that we've covered there, but hopefully it just gives you a flavour for, like, you know, how we can help you decarbonise yourselves, but also help scale sort of opportunities across the sector as well.
Yes, I mean, I think it's fascinating, because when I first started dealing with the bank on a construction basis over 30 years ago, you know, none of these things were available, and the bank just weren't interested. And that was to see them driving change and experimenting to see what works, I think is a really interesting turnaround, and, you know, hopefully will help both the bank but also our members and your customers to make that difference. I'm particularly interested in the training, because that's something which is a real challenge within the sector. And, you know, great to hear you're partnering with the Supply Chain Sustainability School. Again, a much underused, not a repository of some great wisdom. One of the things which you may be in a privileged position as the bank is understanding what the competence you think around your board level is, around the directors for these issues, because often I think that, you know, the risk registers that companies ought to run aren't being run, and if they were running risk registers around a lot of companies, then a lot of things would be identified corporately that ought to be addressed, including sustainability and including some of the changes that you've outlined in some of the things you're doing. Do the bank have any insight into sort of the competence of the people they're dealing with at the top of companies, rather than perhaps the muck and bullets and the people on the grindstone who are actually turning these projects around? Do you have a view on that?
Yeah, I mean, we obviously spend a lot of time talking to our customers, whether that's, you know, as I said, at the top of the supply chain, your tier one contractors right through, and that's, you know, predominantly from a bank's point of view, we are talking to the MDs, the FDs, and the board in terms of that. And I think it's an interesting one, because, you know, like I said, we're not necessarily experts on certain things, and we need to work with people that are. And I think that's the mindset shift that's needed, that if you're a finance director or an MD or a CEO of a business, then you're not going to have all the answers to how you can become more sustainable and how you can get on that journey. So I think there's been huge progress. That's definitely a positive over the last few years, where this isn't a nice to do, it's a need to do. And I think you know, board members are seeing that by way of the pressures that they're getting from their supply chain and the asks, and even the ability to be even able to tender for a project, unless you can demonstrate your ESG capabilities and where you are on that. So I think that mindset shift is changing, and there is more of an interest, and it's becoming more of a priority. But it is, again, talking to the right people to make sure that you're shaping the strategy in the right way, rather than thinking, well, I'll just do the bare minimum to tick that box kind of thing. Because actually what the good what those that are seeing success are the ones that are actually looking at it in a long-term mindset, to say, actually, this is giving me a competitive advantage. This is allowing me to access markets that I wasn't able to. So I think that's important. But what I would say as well is, I think it's really important to share and listen to your colleagues across the business, because, like you say, actually some of them that are out there that are, know how they could make processes more efficient, know what materials could be used and switched instead. So I think it's about encouraging everybody in the business to buy into those, sustainable plans and strategies, and share ideas and thoughts, because that's the only way that you're going to be able to make those sort of incremental changes. Doesn't need to all be big bang type things. It can be small tweaks here and there. So that's the kind of things that we can see, and sometimes there is a bit of a disgruntled workforce by being able to try and promote some of the things that they're seeing. But I think it is adapting and evolving, and that's a positive thing to see.
Yes, I was always taught I've got two ears and one mouth, and I should use them no more than that proportion. And some of our new recruits ask the most simple questions, which really take a lot of responding, and can change boards' directions quite quickly. I think it's fascinating. It really is. Laura, you've talked around about the board's aspiration for carbon and the carbon reporting that you have to do at the bank. And you've talked about all the good things you're going to do to help us support the industry and what you're doing at the moment. At some stage, presume you move from a carrot to a stick. Because unless we start changing rapidly, we're not going to allow the bank to achieve its ambitious targets. And so, is that a likely scenario? Do you see, at some stage that you're going to be more expensive or less accommodating of poor companies who are delivering poor results in terms of carbon?
So I think we do appreciate that everybody is at different stages of their journey when it comes to the net zero transition, and I guess that's predominantly why we've focused on providing the right support, tools and solutions to help businesses become more sustainable. But as I said, like any business, we need to look at things from a risk perspective, and there's that risk, as I alluded to, around businesses that fail to transition to net zero just become higher risk of becoming poor credit risks. So if they don't embrace sustainability, they're going to become uncompetitive. So that has an impact on us in terms of our potential losses, credit risk defaults, etc. So we're very mindful of that. And so we have started to take those steps to start to build climate considerations into our decision-making processes across the bank, and indeed so will other banks. And look at that from two perspectives, I guess. From a pricing point of view, so we're continuously refining our pricing frameworks to integrate climate into our decision-making there across our sort of wholesale portfolio. And those improvements, I guess, is to ensure that we can continue to support businesses that are addressing, climate challenge, whilst also steering our commercial and institution segment towards more sustainable and transition-aligned transactions, because that's the way that we want to move towards. And then from a risk decisioning point of view, again, we've made enhancements over time to what we call our ESE risk acceptance criteria, so our environmental, our social and ethical risk acceptance criteria. But we've also now started to develop climate risk scorecards as part of our climate decisioning framework. So I'll try and put that into language that means something. So what that climate decision framework tools are meant to do is basically firstly to help us engage with customers with climate as part of any normal customer journey, but then really start to focus and to understand our customers' transition journeys relative to peers and the sector similar to them. What actions have they been taking? What plans do they have in place? What are they doing to engage with their supply chain? So it's starting to get into some of that granularity. And we've also started to expand our approach to climate risk from a perspective to assess that exposure of a business to physical climate risk. So are they based in a flood prone area? What does that mean in terms of their ability to trade or the value of their property or buildings? And potentially could also mean, are they susceptible to supply chain shortages and things like that? So we're starting to look at it in that lens. And then we're also starting to evaluate our exposure to transition risks. So is a business potentially in a sector where their products may lose demand as consumers shift towards more sustainable alternatives? So, initially, as I said, these tools are to try and understand our climate risk in a more detailed and granular structured way. But as we evolve and we sort of increase our data collection, then there is the intention in time to make that part of our climate transition plan, so our own bank's climate transition plan, and to embed that into our decision making. So I think we're not trying to sort of take a punitive approach as such, but it's more just to making sure that climate becomes really integral and remains a key part of our decision-making processes. And as I said, that will be the case for all banks as well.
I mean, the sort of the information you're talking about there, Laura, is information that most boards perhaps should have, may not have, but should have, to be able to answer a lot of the questions we've been asked on supply chains in any event. I mean, as you're talking there, one of the things that you'll be well aware of in construction is the length of the supply chain. Many of your customers may be tier 4, 5, or even 6 on various projects. And do you worry about the sustainability or the resilience of people further up the supply chain and the effects that may have on your customers? Is that something that you can impact, or is that something you can sound alarm bells over to your customers?
Yeah, I think inevitably the further down the supply chain you are, the harder it becomes, and the less resources and capabilities as such that you might have. But I do think this is, again, it does need to become a bit of a team sport and a collaboration, because if you're at the top of the supply chain, you need to help those throughout that value chain to be able to decarbonise. And so we do see some great practices of businesses helping their supply chain to not necessarily decarbonise as such, but provide them with some of the education and things that they can think about. And this is about sharing best practice more than anything. We don't all have the answers. So I think it's a case of just trying to help and iterate as we go along. And our role as a bank in that is then we have that expertise, and it's very likely that we've seen a business that's been in the same shoes as someone else, and they've tried to do the same sorts of things, so we can help share that knowledge and expertise in that, and as I said, put some of the tools in place that then can help you do that. So it's not an easy one, but there is definitely a different approach, and in the construction sector, collaboration sometimes is a challenge. But I think when it comes to sustainability, we're seeing much more positivity around that and support, and everybody's got to share that risk and opportunity through that value chain. And in fairness, we see that across other sectors as well. But yeah, there's going to be a longer journey for some versus others, but everybody does need to catch up and play their part as well.
So one of the things I'm hearing there then is actually to be using your expertise. If you're in a long supply chain, the bank may well have seen or be even banking people further up the supply chain and be aware of the challenges that they're facing on their own sustainable journey as they're going forward.
And we're trying to look at ways that we can help as well. What are the mechanisms, initiatives that some of the top tier contractors, because they need their supply chain to decarbonise, to access the public sector projects that they're working on, so they need to demonstrate that. So an example completely not related to construction but gives you an idea around it. So in the agricultural space, we've partnered with McCain's, those, when you eat your chips, they're probably McCain's chips at home, and if you pop them in the oven. They came, they came to us and we spoke to them because through their supply chain, they're like, how can we get our potato farmers to invest in more equipment that's going to make them more efficient and produce less emissions? So we were able to partner with them and provide, the funding mechanism at an incentivized discounted rate. So McCain's are subsidizing that to a certain extent. So, these are the sorts of things that we're sort of trying to evolve and adapt and see what other supply chain initiatives there are to help with that. They're going to be, slightly different for every industry, every sector and every outcome. But I think, again, that's perhaps the bit, like you say, whereas banks, we're trying to evolve our thinking and do things differently to help drive that change. So yes, we've got some of the expertise, but how can we put those actual mechanisms in place as well to drive that change? So that's some of the thinking that we're also doing.
Brilliant. I mean, I think it's sympathetic delivery, isn't it? It's actions. We have to get actions because time's running out for talking. It's great to see. Laura, we've had a great canter through banks' aspirations for and the services and the help and support you're offering your customers. From the bank's perspective, what are the three actions, if you had to summarise 3 actions that you had to see construction companies or your customers doing? What would they be? There's a sort of final hurrah for the interview.
I mean, I've touched on some of these already, but just to summarise, I think the first thing is just to start to take some action. Even if it's small steps, taking that first step can, to becoming more sustainable can really help you as a business to be sort of fit for the future. So, where possible, try to look at how you can adopt more sustainable building practices, switch to alternative materials and look at your processes and your waste reduction strategies. I'm really conscious in a sector where margins are tight and costs are high, that does seem like it isn't necessarily a priority, but I think it is thinking long term, and moving towards sustainability does give that multifaceted sort of competitive advantage. So it's having that in mind. And we do see that, companies that are integrating sustainability into their operations and projects are really starting to thrive in an evolving construction landscape. So start to take some action. I think the second one is to invest in your workforce and provide that training and try and drive innovation and seize those opportunities that a net zero economy can bring. And as I said, you don't have to have all the skills and capabilities and the resource to do that yourself. There's some great support already out there. I mentioned the Supply Chain Sustainability School, and we've partnered with them on the retrofit program, but they provide a whole host of resources on sustainability, how you can start to think of a sustainability strategy. So just go and have a look at that. It's all free to access, and you can get your employees on that quite easily. And I think that's important because that's a proof point to when your supply chain are asking about what you're doing, you can actually demonstrate that as well. And I think the other bit on supporting your workforce is it actually acts as a retention and recruitment positive as well, because we know that businesses and the future generations see sustainability and purpose as a key motivator for either staying employed in that business or where they're looking to move into. So I think that's important as well. And then lastly, I think it's then sort of just starting to measure and report your progress. So set some simple sustainability goals, small targets, achievable ones, and that could just be looking to reduce your energy or cutting waste, you know, even those modest steps can really make a big difference. And then, you know, once you're, you know, doing that and building your confidence, then start sharing your efforts with your customers and your suppliers, and talking about what you're doing to work towards sustainability, and also sharing the challenges that you have, because you know, again, people can help you with that, and it might be that, as we've said, your supply chain may be able to help you with some of the challenges that you have. So I think those are hopefully 3 actions that can help businesses to become a bit more sustainable, but also position themselves as, you know, in a strong position to take advantage of the opportunities that are presented to them as well.
Brilliant. Well, Laura, it's been a hugely upbeat conversation. I've been absolutely enthralled to hear how the bank's actually pivoted into helping what we're doing now, and to get your 3 actions of, you know, get going, train your staff, and then measure and progress and collaborate with everybody to make sure it's lower. I think we could have heard that from a great many people who are involved in construction. It's a very common message that unless we get going, we can't do it. Unless we know what we're doing, we won't do it. Yeah. And everybody's in this together. So collaborate, talk, collaborate, and demonstrate. I think it's absolutely the right message. Laura, it's been a privilege talking to you. Thank you so much for your time today, and we look forward to what the bank's going to be doing over to get to 2030. I mean, halving your emissions by 2030, I think you said, is going to be a real challenge for all of us, and particularly if you're relying on the construction industry to more than play its part. It's really good news. So thank you very much.
Thanks, Mark.